Hi, I'm your host, Barrington Miller, and welcome to another edition of Hashtag Finance brought to you by Public Entrepreneur. Today, I'm here with Jay Waterman from Blockstation. Jay Waterman is the Chief Enterprise Architect of Blockstation. And what does that mean? What do you do?
Well, Blockstation basically is an enterprise turnkey solution so that stock exchanges can basically offer digital assets. And our platform basically allows the entire ecosystem, so the stock exchange, the depository, the brokers, the investors, and as well as the regulators to all get into that system to have a fair, compliant marketplace for the future of what securities will be.
So I read that you're the inventor and creator of cross-company automation. I tried reading about what it was, and I think it's best to just have you explain what you invented.
Okay, cool. So basically, if you just imagine, if I send you an invoice, you've got to go and have your bookkeeper enter that invoice as a bill, right?
Mhm.
And then, so what we did with cross-company automation is we connect the different companies together. So if I invoice you, that can automatically be your bill, right? And when you make your payment, that automatically becomes my received payment. And then we can also write all these transactions to the blockchain so that everything becomes very transparent and everything is reconciled, not only internally with one company, but across all companies. And so it makes auditing processes more efficient, and it also reduces errors and time spent on bookkeeping.
So this is the basis of Blockstation, or
No, that's actually what kind of got me into Blockstation, because I was doing this automation process, and we can automate the payments as well. Like in Canada, we have EFT. In the US, you have ACH, but internationally, there's no option, right?
Right.
So when I learned about Bitcoin and its abilities to transfer money, internationally, I was like, whoa, this is something that's gonna actually allow this cross-company automation to really work internationally. I just need to get this blockchain thing, mainstream. And that was kind of where Blockstation came into the picture, of starting to develop this for the stock exchanges, which is the center of the financial industry.
When did all of this start to come together? Like, how long's Blockstation been around?
So we started developing back in 2014. And it started with the idea of, initially the idea just to help that cross-company automation process. As I dug in and got more into it, of course, it turned into something a lot more than what was expected. And we started to work with the stock exchanges and learn about how the depository and how they have to keep custody of the assets in order to make sure to mitigate the settlement risk. And basically, step by step, kind of building out all the different pieces of the ecosystem to make everything work together in a turnkey solution. It turned out to be a lot more than what I signed up for. But very, very happy with the results. And it's basically, helping to move stock exchanges into the future.
Speaking about moving stock exchanges into the future, there's a few letters that are being thrown around: ICOs, STOs. Can you speak a little bit about it? That's for the people that may not know what an ICO or an STO is.
So ICO is what we call an initial coin offering, and they're basically like, kind of, you can say it's kind of like the idea of an IPO, except for these are coins on the blockchain. Now, the problem that happened with the ICOs is that it was in a completely unregulated environment. People who were buying these coins didn't necessarily have any rights. So if you bought shares in a company, you have maybe some voting rights, you have ownership, you have these different things. But with the ICO, you didn't necessarily have anything at all. And so this was a big problem, as well as you had no regulation, no oversight, and it wasn't in safe environments. So you had people doing scams, some people getting ripped off. But what was great about it was what it demonstrated was the power of the blockchain, essentially. And what it showed is that if you're raising capital using blockchain technology, suddenly you can open your doors and be very inclusive in terms of who can participate. For example, if somebody in, let's say, India wanted to participate in a offering that was happening in Canada, and they wanted to do a bank transfer, might cost them $100 to send $100.
Right.
Right. But with the blockchain, if you were sending some Bitcoin or Ethereum, that $100 might cost you 50 cents. So suddenly you open up the doors and companies are suddenly raising tens of millions, hundreds of millions of dollars. Now, if we take that and we put it in a proper regulated environment with the correct compliance, the right oversight in the, with the stock exchanges, now we can create something we call a STO, security token offering, where people can have trust in what they're buying because they understand that the stock exchange is involved. They understand that there's security because the depository is, holding on to the assets. They understand there's regulatory oversight. They're making the deposits with broker dealers. And so everything changes when you put it in a nice regulated environment. And another cool thing about the STOs, for example, is the power to mitigate risk for the regulators for things like insider trading. Okay.
Mm-hmm.
So let's say Martha Stewart, one of the most famous insider trading situations.
And we're just using this as an example.
Just
We're
as an
not
example.
just pull the name out of thin air.
Yeah. So, unfortunately for the consumers who are not insiders, they're going to find out about these things 3 months, 6 months, a year later, after they've already lost their value. With the blockchain, just imagine that we could put all insiders' tokens inside of a marked wallet. Okay. And once we see an insider, or the regulators see an insider move their tokens onto the exchange for trading, everybody knows in real time. So it also gives the regulators a lot of power and a lot of risk mitigation, as well as the end investors. It gives them protection because they can see what's going on. So there's all these things that are built into the blockchain that makes it a lot more powerful.
When I last saw you during a presentation that you gave, you were using some props. You were using some ski masks and burglars entering and the like, which we can't really get through on a podcast. But if you get a chance to reenact it at some point, I'm sure the audience would appreciate it. Why are ICOs dying and STOs are the future?
Well, ICOs are dying again because of that regulatory compliance that was missing in it, right? You had companies that were spinning up, putting out these ICOs. People were excited about it because of the technology, the blockchain behind it. So they're kind of just rushed in, kind of like the internet boom, right? People get excited and they do things without necessarily thinking. And so when people realize that, hey, I'm buying this coin and I don't have any rights, there's nothing behind this company, there's no protection, then after a while, this is going to eventually die off naturally as things come to the light. What that showed is it showed the traditional financial institutions and the stock exchanges that, hey, this is a powerful mechanism for raising capital. Even though these ICO guys were bandits and masks and all that kind of stuff, it kind of opened up everybody's eyes into what the potential could be. And for issuers who want to raise capital, issuers want to open their doors and raise capital have a bigger reach, right? And one of the things the blockchain provides is that transparency. So if I'm an investor and I want to know a company's market cap, and a traditional stock exchange, we have quarterly reporting.
Mm-hmm.
So I might know what the market cap is 3-4 months in arrears. But with the blockchain, as new tokens are issued, I can know that in real time. This is just an example of the transparency, right?
Right.
So as an investor, I like the transparency. And so I'm more likely to invest in a company that provides that transparency. And so issuers like it, because not only that transparency, but it's efficient. It opens it up to the world where they can now, take in funds from companies and people across the globe. And of course, stock exchanges want to support the issuers. So the stock exchanges now, including, I know the CSC is working on their blockchain solution. And that's one thing I really admire is when stock exchanges are actually taking the initiative to do something. It's awesome.
What are the challenges? What are the challenges going to be of making this STOs mainstream?
I think the main challenge is the education part, because what happens is when we go into a new region, the regulators generally have a misconception of what the blockchain is. They think that it's something where it's completely anonymous. But the reality is the blockchain gives us the most transparent, ledger in the world. So we look at it in terms of there's three levels of transparency in terms of a transaction. The lowest level, we call it opaque. Imagine a guy goes into the bank, he deposits his cash. Where'd you get it from?
Here comes the
I
mask
got
again.
it from my uncle. We don't know where you got it from, right?
Right.
And then you got translucent, right? This is like a bank wire, okay? So wire comes in, and the bank can clearly see it came from, let's say, China, okay? We don't really know exactly where it came from beyond that without deep digging. And then you got the blockchain. With the blockchain in the right framework, you cannot just only see that it came from China, or from China it came from, let's say, Malaysia, and from Malaysia it came from North Korea, which was sanctioned. And so as an institution, we can see that, hey, you know what, we're not necessarily comfortable with this transaction, or we're not comfortable with this client, and then they can do something in terms of risk mitigation. And so when we demonstrate that, like actually on the software, we demonstrate that to the regulators, then they're like, whoa. When they realize that they have better transparency, better risk mitigation, better ability to regulate and protect the consumers, then that blockage goes away. So that's the number one thing, is educating the regulators. I think the second thing is the legacy systems. So a lot of stock exchanges, brokers, they already have their legacy systems. They spent a lot of time and money on it. So it's not so easy for them to just switch over. It's actually easier to go into a region where there's less or nothing at all, and we can spin everything up in a couple of days. All the processes and procedures kind of follow the same thing that the existing ecosystem follows. So the learning curve is low. And again, I think those are the two main challenges: is that education part, and having guys kind of let go of the legacy systems.
Now, if I'm just sort of jumping around, how long would it take you or Blockstation to set up at a stock exchange? To say you had a system that's been in place for 50 years, 75 years, and then Blockstation comes in, does an analysis. Does it matter? Does it depend? Is there like a cookie cutter?
Our favorite thing to do is if there's a system already in place, keep that system running and set up a parallel system. So we actually did a case study in Barbados where we went and we trained the brokers, the stock exchange, the depository, as well as presenting to the regulators to get their approval to go forward. And we did this all in 5 days, where everybody was comfortable in terms of clearing, settlement, trading, monitoring, everything together. Again, this is because we modeled things after what's already existing, right? The difference is we added the blockchain into it to give that extra boost, per se. So again, we could actually do it within 5 days. There's no issue from a technology perspective. It's more like how long is it going to take for everybody to come on board, and how long is it going to take for the regulators to give that green light to move forward, let's say, into a pilot stage.
The blockchain's been around for a lot longer than people realize, but it only seems recently that they're really catching on for all its uses. I've been telling people that it's not necessarily there to make people money, but it's to save people money and to become more efficient. And I think people are starting to really catch on to that. Will they replace conventional financial instruments or exist alongside, sort of like how you build Blockstation parallel with the other exchanges?
The way I look at it is kind of like a newspaper or a magazine, and moving to having a website. Mm-hmm. So you're still going to have some newspapers and magazines that exist, but ultimately the majority of the content is on the web. And there's obviously, because the web has more efficiency, there's less cost, of course, right? Mm-hmm. So it's the exact same thing that I see with the blockchain, is that we're going to have some securities that will remain in paper, some will remain in its existing digital form, and the majority of them will eventually move to the blockchain.
What about hacking? Security? Those are those are all buzzwords. Cybersecurity, cybercrime. Will somebody hack the blockchain and take all my shares while it's in transit? I'm just using very banal examples, but I think you get what I'm trying to say.
That's a great question. So, I mean, with security tokens, so I mean, let's say something like Bitcoin, right? With Bitcoin, if you lost your private keys, then unfortunately you would be out of luck. Okay.
Mm-hmm.
Or if somebody hacked and got your private keys, you'd be out of luck. So with Blockstation, what we do is we make sure it's impossible to hack, right?
Impossible.
Yeah.
You're like, yeah.
Can somebody hack this piece of paper? It's not online.
Right.
You can't hack something that's online. So simply you keep it offline and it can't be hacked. Now it could be stolen. And so what you do to prevent or mitigate that risk is you have a distributed key system. So you have 5 keys distributed across multiple entities. So for example, the broker might have a key, the stock exchange has a key, the depository has a key, we have a key. And so you need, for example, 3 out of 5 keys to sign. So even if, God forbid, one of those guys in the ski mask came in and said, give me all your private keys.
Give me all your keys.
Well, they're not going to get anything because they're going to have to do an Ocean's 11, Ocean's 12 situation, be in multiple places, multiple countries at the same time, get the keys. It's extremely difficult. And so the processes that we put in place allows us to have 100% insurance against those digital assets, which is awesome. Which is actually more than you have on your cash inside of trading accounts, apparently, mm-hmm. which is, I learned that recently. CDIC and FDIC, they don't insure cash in trading accounts, which was interesting. So in terms of security, that's locked down. And with security tokens, we have the ability to burn the old tokens and issue new ones. So if you said, hey, I lost my keys, or somebody stole my keys, or whatever the case is, we could say, okay, you know what? All of your tokens in that address, we're going to burn them and we're going to reissue new ones.
How do you burn them?
Sorry,
I'm
just a lighter.
Well, I'm looking at the paper. Can I hack the paper? I'll just burn the paper.
Yes. So there's a method on the blockchain that on our 884 protocol. So for example, with the Ethereum's 884 protocol, we're able to burn the old ones and issue new ones. So just like you can issue them, you can put them back into the treasury per se.
Who benefits from adopting STOs?
I think the entire ecosystem. I think that basically, first of all, I think the issuers number one, okay, because they are creating their company to be more transparent, okay. They're opening themselves up to be able to raise more capital or at a better valuation because they have a bigger pool of capital that they can raise. So that's more beneficial for them. They have the investors, it benefits them because, again, they can have more transparency into what they're doing or what they're investing in. Also, they can invest in more opportunities. There's a whole bunch of illiquid assets that are now going to become very liquid with the blockchain. Things such as, it could be properties. So just imagine you got a building that you bought. It's going to be locked up for some period of time until it gets to a certain phase. That could be trading on a daily basis where you could be going in and out and have the liquidity. You have, let's say, publishing rights. Usually these kind of publishing rights contracts are worth huge amounts of money, and they sit there until a new big buyer comes along. These could be trading on a regular basis. So there's a lot of different assets that are not liquid that will suddenly become liquid, and these investors can now get in. It makes it more